Hi, my name is Miron. Today I will tell you what is happening at this time with the US markets. US stocks had their best day in 2 weeks on Tuesday, offsetting some of the recent losses as appetite for risky assets returned after 3 days of sell-offs. The S&P 500 index rose plus 1.8%, its best day since December 7, after it closed the worst 3-day stretch since September on Monday. The recent sell-off was caused by concerns about the impact of Omicron and rising inflation on the global economy. 9 of the 11 market sectors rose, led by energy shares, plus 2.6%, consumer discretionary, plus 2.5%, and technology, plus 2.5%, while consumer staples and utilities stocks closed down by minus 0.1%. Nasdaq 100 rose by plus 2.3%, which was the best day since last Wednesday. The Dow Jones Industrial Average Blue Chip Index jumped by about 560 points, or plus 1.6%, which was its biggest daily percentage gain since December 6. It overtook the main Russell 2000 indices with a result of plus 2.9%.
According to analysts, stocks returned on Tuesday, as concerns about isolation measures due to Omicron decreased somewhat, and hope for Biden's stimulus package also returned.
This year, traders looking for profitable deals often prefer to buy stocks when prices fall, which exacerbates sharp market fluctuations. I'm not surprised to see 2 days rebound. The buy on the downs mantra is still with us, Dan AI, Chief Investment Officer of Fort Pitt Capital Group, said in an interview. Although I still expect to see an increase in volatility amid the tightening of the Fed's policy. Biden warned that Omicron will lead to more infections among vaccinated Americans, but they are unlikely to get seriously ill. He called on schools to adopt testing for visits strategies so that children are allowed to go to school, and said he could lift Omicron-related travel restrictions to southern African countries. According to sources, the US Food and Drug Administration (FDA) is ready to allow the use of pills from Pfizer and Merck for the treatment of infected patients with an increased risk as early as this week. Meanwhile, Boris Johnson ruled out stricter restrictions before Christmas, but urged caution. Natural gas prices in Europe reached a record after supplies from Russia to the Malnov station in Germany stopped on Tuesday. The suspension may be extended, since Gazprom has not reserved transit capacity for deliveries on Wednesday. The decline in supplies to Germany will force Europe to continue taking fuel from already weakened reserves. Higher costs and sub-zero temperatures also threaten to shut down industry across the region. Stock market. US stocks were recovering as risk appetite seems to have returned to the market. The S&P index rose 1.8%, the Nasdaq gained 2.4%.
The oil and gas sector, it and manufacturers of durable goods, at the expense of casinos, hotels and cruise companies, became the leaders of growth.
Only manufacturers of consumer goods and the electricity sector closed in the red. Miron technology shares jumped 10.5% on optimistic forecasts. Chinese technology papers showed a rebound, especially worth noting Web, which soared by 6.7%. Brent futures rose 3.4% to $73.98 per barrel. Gold lost 0.4% to $1,787.52. The ARTS index added 1%, the Moscow Exchange Index strengthened by 0.7%. The ruble was trading in the range between 73.72 and 74.12 against the US dollar. Gazprom added 3.4%, of which an increase of 1.2% to 339.88 rubles occurred in the evening session on the news that the company did not book capacity for transit through the Malnov compressor station in Germany, as a result of which cash futures soared by 28% to new highs. Lukoil closed unchanged after rising 1.8% during the day. Rosneft added 1%. Novatek gained only 0.5%. Beat grew by 0.7%. Dient rose by 1.4%.
Metallurgical companies traded mixed. Norilsk nickel minus 0.4%, Rusal plus 1.3%, Sevastol plus 1.9%, Memc minus 0.35%, Elam minus 1.8%.
Gold producers declined. Polyus and Polymetal lost 1.5% and 1.6% respectively. Arts futures are up 0.25% this morning. Debt market. Global benchmarks are returning to levels before the week of central bank reports on the results of the meetings. The M sector is mostly in the red zone, but spreads have decreased at the same time.
The exception was Turkey, whose government announced that it guarantees a hedge to the owners of deposits in the lira. If the dollar's growth relative to the lira exceeds the interest on the deposit, the state will compensate for the difference.
In addition, the tax on investments in lira has been reduced to 0 from 10%. The government has also increased the amount of co-investment in pension programs from 25 to 30%. The lira has played a significant part of the recent fall. Turkish sovereign issues also rose. High-yield bonds traded mixed. Amex announced the results of the tender for the redemption and exchange for a new issue with maturity in 2031. The volume of short-term securities submitted for exchange was small, mainly bonds maturing in 2027 and 2030, and among long-term securities, maturing in 2047. MX 50 showed an increase of 2.5 figures.